Alright, welcome back to Only Divergences. Here we focus only on technical analysis, and more importantly, beautiful bullish divergences that we can find in these charts. Tonight, I want to update Roku, because I've not done so in over a week, and while there aren't any major developments, there are some things that I do want to point out, as well as some things I want to outline with regards to what I'm looking for long entry potential, and I am talking about sometime either this week or next. Before we start, as always, a special thank you to everyone who likes my videos and all my new subscribers. I'm going to be here with you as we navigate these markets, and all I ask is that you keep me accountable and join me on this path. Okay, so let's get to Roku. As always, we start off with the weekly time frame to provide context. And what can we say about this weekly time frame? The stock, was in a kind of a sort of a volatile trend higher. I can make a whole video about this move here. This was actually very beautiful. Then it came down the March lows, and then it continued to move higher. And take a look at how thin this trend was. This is a nice trend, but it's really thin, right? Most of this, I think almost everything was contained by this orange 10-day exponential moving average. Sorry, it's a weekly chart, so it's a 10-week moving average. We never really had price below that, but once we broke below that, that was kind of the end, right? Now, I outlined this in the previous video. You can watch it by clicking on the top right. I've also put a link to that video in the description. It just outlines the context, but basically tells us that we're in a bearish divergence here on the weekly time frame, which is really big. So what we have is we have a long, thin trend that was broken. And you can see we had a high here around 500, came down, had a second high here, and now we've come down from that. Now that is what I call, and what many call, and what is technically called bearish divergence. We have momentum up here, and then the second time price moves up here, momentum's actually down here, which tells us the momentum has shifted. That's all I want to point out with regards to the weekly chart right now, and the daily we can do a little bit more. I mean, with regards to negative divergence, you can see it happening here. We have a momentum high here, and then we have a subsequent momentum high that's lower than the previous momentum high, but price is higher. What do you get? You get this big bearish divergence move lower, and then it finds its footing around the 200-day moving average and goes higher, and then you get another bearish divergence. See, momentum is up here, and then you have a second high in momentum that's lower than the previous high. So not only do you have bearish momentum divergence on the weekly, but you have it on the daily as well on both of these. So that's really bearish to some extent. But on the daily, there's one thing that I do want to point out a little bit. So first here, and I talked about this in the previous videos, we're talking with regards to expectations, right? So last time we had a pullback to this level, we got nice bounces. And so I think that there are a number of market participants who are looking at this and saying, oh, I expect to bounce in Roku. I expect to bounce in Roku. In fact, I see a lot of people like this on Twitter, right? But the one thing that you have to look at objectively is this indicator right here, the ATR. And pay attention to the fact that it's low, and it's at the lowest that it's been in for a long time, right? So what is the ATR? ATR is average true range, and it measures the range of the daily price of the stock. Or if you can use it on the hourly, and it'll measure the hourly. Now, the way to interpret this is as follows. When you have a situation like this where average true range is really high, what that means is that when price moves, you're going to get big moves in prices, right? So you get big moves down, but you also get big moves up, right? So we had big down days, but then, gapped higher and went here, and then big green candles, big red candles, all that type of stuff, big green candles, all that type of stuff, because average true range is still high. And even here, average true range is still high. But what's happened recently is after this move here, this post high, which actually was a new high for the stock. So it did break new all-time highs. It's come down, and it's doing so very slowly, right? You don't get these big candles, with very little exception. Like these two came after a long period of consolidation where average true range was really low. The market needed to make a decision. And so it released the upside and then came to the down, because that's what the longer term was telling us. So what does that tell us? Well, I actually want to point out two things. The sensitive indicator, the DMI here, has green above red for a very long time. And remember, we talked about this in Uber today. In fact, I can pull it up for Uber. Now, this only starts back in August, right? Whereas, if we pull up Uber, we can look at Uber's elevated green, and look how far it was. The elevated green was above the red since May, right? So you had this desire for the stock to find a rebalance, right, and let red go above here. I talked about that in my Uber video. I'll put a link in the description on the top right here. And so you have this buildup of negative energy, and it needs to be released, and that's what happens. Now you have a similar buildup, but it's kind of getting close. It's trying to, but the average true range is really low, right? So let's just compare this again. We had low average true range as well, right? Similar thing. Now here we had a bit clearer divergence. We talked about that in that video. Go watch it. I'm not sure that we have that same divergence here. No, it's a different pattern here, right? But we still have this elevated green. And if we can get red to flip over, or if we can get a pattern that suggests red wants to flip over, then we might be able to do that. Now, one thing I want to point out, and I'm not going to do a video on Beyond Meat, but Beyond Meat was in a similar situation, right? It had an elevated green. Now, it had come down here a few times, but what happened is it had a puke to the low, and that puke allowed it to get the room it needed to kind of continue higher. Now, if we had a more bearish pattern here that suggested that the stock wanted to continue going, then you don't want to buy there. But here was a great opportunity. This was another 2,000% move, right? I'm talking about the options here. Look, that expired on Friday. So you want to have something like that, but notice how low red was, how elevated green was. You're taking a big risk here because you're saying that, you know, it's at the low and it's going to flip around right away. But that's really the only way you can get those types of returns. Now, let's take a look at the hourly, because the hourly might tell us a little bit more. We can see we had a low here in MACD, kind of a double low, and then we had a little thing here, and this formed a little bit of divergence, which allowed us to move higher. But you can see that it faded, and of course it faded because there's really not a lot of strength in this trend right now. As I said, we've formed bearish negative divergence on the weekly. So generally, that's a very bearish pattern. Now, that doesn't mean that we're not going to get relief rallies. But as I've said before, you know, this one we had elevated green. Now, we do have low green and elevated red, but the red is sloping down. And there are times when a sloping red actually indicates that we're going to get a nice spike in red, and then we're going to continue on with this red, especially when you have low black, because that indicates an end of the trend, right? Here's an example. Red moved higher, and then it came lower, but then it spiked right higher. Now, at that time, we had a nice, beautiful pinch. You know, we had ATR coming down to a cataclysmic low, so you would expect that type of release. I'm not sure we have that right now. Let's take a look at the 30. Do we have anything? We can compare it to the previous high. We can see that this was much more beautiful than what we have here. So, again, I think that Roku will continue to be a trading stock for now. In terms of, you know, what happens next? Well, look. We're under all the moving averages on the daily, right? The 200-day moving average, this one in orange here, is flattening out and prices below it. So that means that in the coming days and weeks, I wouldn't be surprised to see that flattening out start to turn over, and the really only way to do that is for this to move lower. So unfortunately, two things here is that I don't think that we're at the bottom for Roku just yet. But also, I think that when we get to the bottom, we'll have a very good bounce opportunity, and that's really what we're looking for. Okay, so that'll be my update for Roku just now. Again, not something that looks perfect, but yeah, I mean, there will be opportunity coming. It's just not yet. So again, thanks for watching the video. Remember to like and subscribe, and I'll see you tomorrow.